Hello. So finally, you're welcome to the ultimate tutorial you have been waiting for. Now we are stepping into how to trade, how to make profit with DI robot. So we're going to be using DI robot basic 1 in this tutorial. So I will be showing you what it consists and how to interpret all of the signals. First, I like to show. Okay, I think we need to use the basic 2 for this purpose of this tutorial, since everything contained in basic 1 is also there in basic 2. So I'm just going to log in. I'm just going to switch on to the basic 2 version. Yes, this is the basic 2 version. First of all, I'd like to introduce you to all the color coding and all the write-up and text that are displayed by this Divine Intel robot. Starting from the left top corner of your MetaTrader 5 screen, you would see starting balance, yellow line command, white line command, previous white line command, red line command, blue line command, turquoise line command. So these different lines actually signifies different levels of signals. First, we'll be starting from the yellow line command, which is the first and most basic signal level that you will get in the DI. This is the yellow line, for example, and this upper yellow line and the lower yellow line enclose the whole signal influence area. So anytime you get a signal, anytime a change in the market movement is observed, a signal will be emitted. And this top yellow line is the resistance. That means this is where the forces pushing the price down started acting from at this moment. And then the bottom yellow line is the support line. That means this is where the force that tends to push the market upward begins to act. So this is the top and the bottom line. So these other smaller lines embedded with the yellow line are the actual signal zones. So they represent the actual signal zone, that's where the real core, where the real force of the signal is concentrated. So it's an aqua line. It's an aqua color line. So this is it. It may not be embedded. I mean, sometimes they lies free within the yellow line. Sometimes the upper resistance line of the signal core fuses with the upper line of the whole signal boundary. Sometimes the lower line fuses with the lower line of the like we find in this case. But sometimes both signal core lines lie freely within the upper and lower boundary, but they will never be found outside of the two yellow lines boundaries. So that's one thing you must understand. The signal core lines that belongs to a particular yellow boundary lines are always in the same horizontal distance. They all line in the same horizontal distance. They all start from the same point horizontally, and yeah, all started from the same point. So you have to watch these center lines, these signal core lines, so that the basic principle is that anytime you get a signal and the price is within these signal core lines, usually the signal starts from the signal core, and we expect that the price would either move up or down. So anytime you get a signal and the price moves up and closes above this signal core line, it means that the resistance of the signal core line has already been broken. And then the tendency is that if all things being equal, the price will continue to rise and rise and rise until something else, I mean, another level of signal intercept until it is intercepted by something, whatever it might be, some other forces that will cause it to reverse. So anytime the bottom core line, we're dealing with the core signal lines right now at the moment. Anytime the bottom core signal lines is broken, but please pay attention to what I mean by broken. By being broken, I means that they must the price, current price must cross it and close, and that candle must close. So for those of you who are beginners with the forex trading market, there are each of these bars is called a candle. This bar, this red bar is a candle. This bar in forex trading we call it candle, or in financial, in stock markets, or in trading ecosystem we basically call it candle. This is a candle. This one is a turquoise or blue candle, which is a buying candle. It means that the buying activity happens here. This blue candle would always open at the bottom and close at the top. It means a buying is taking place at the moment because it started from the bottom and it's moving upward. But when you see a candle that is red, that it started from the top, opened at the top, and closed at the bottom, it means a selling is taking place. So each of these bars are called candles. So anytime you get a signal, like I said before, and then the following candle, it could be the next candle, it could be the second next, the third candle starts from within this signal core area and closes and ends. Make sure that it ends before, make sure that that candle ends before you you make trading decisions, because sometimes it can just break through the signal core areas and go back, but would never close, would never end outside or close outside the signal core areas. That is not valid. That is not a valid buy or sell signal. So I'm still going to try to show you examples of this, of what I mean, which signal is valid and which is not. So anytime you get a signal, watch the signal core area and what the next candle will do. Whenever you see that a candle starting from within the signal core area and closing and ending outside the signal core area, the moment it ends, you know that you're going to be taking a trade in that direction, in the direction that it's going. If it ends above it here, you know that the price is likely going to go up in that direction. But if it ends below it, closes below it, know that the price is going to close below, I mean, it's going to continue to fall to go down. Like for instance, we just got a new signal right now, and look at this candle. The next candle started, it penetrated the aqua line, the signal core line, but it never closed above it. See, it penetrated it but came back in to close, to end within it. So that is not a buy signal. That is not a valid buy signal. But the next candle right now seems to be going down, crossed it as well, but has not closed. This is not a buy confirmation yet. Since it has not closed, it is not a buy confirmation. So you can, sorry, it's not a sell confirmation, but it has already crossed below it. So right now we might be thinking that we have to sell, but this is not a sell confirmation yet. You must wait until it closes, because sometimes it can go far down and then reverse, just like what happened here. So now this is a sell confirmation. And based on what we've just explained, since this candle just closed below the signal core area, now we can sell. But one more thing is that before you sell, watch the regions that lies beyond. If there are no other lines, if there are no other support or resistance lines above, even after the candle has closed, then you are free to sell. If there's a free traffic ahead, then you can sell or buy. But if you have another line like the yellow line right here, it means that there is still going to be another resistance, another force, another junction where some resistance will be offered. Like here, look at it. It got here and it had to go back to recuperate and had to come back again. Look at it. It had to return. Why? It is reacting to this lower yellow line because it's also a boundary. It's a boundary of force that acts against whatever is coming at it, or whatever is coming at it from either direction. So when if we happen to get another close below this candle, then we can now say yes, now this is a confirmation to buy, because this region, the region that lies from here to this place to beyond, is basically free. It's free. There are no interceptions. There are no other lines of forces that we can see at the moment, at least at the moment. So we can hope to take profit to maybe sell from here and then watch the price go down and take profit as much as we can. So that is the basis for the yellow line signal. So the yellow lines, the signal is forces. The signal, these lines actually are forces of interceptions, and your ability to be able to analyze, because these forces are always present in the market and they determine the price direction per time. You see, it still has not been able to break through. However, if we had enough space between this aqua line and the next yellow line, we would be able to enter the trade and take profit just before the next line is hit. So it's kind of logical. Okay, it's very logical. Just observe, if you have enough space, like if you have enough room to enter a trade after you noticed a close here, and you can enter a buy trade and wait for the price to rise to this place just below the yellow line and take a profit. Yeah, of course you can. So the whole thing is about how much how much safe trade, how much safe area or safe trading zone do I have to trade to make profit. So when you can think in this way, then you will be able to use these resources. When you can think in this way, you'll be able to, as time goes on, as you continue using it. Okay, right now we have a close below the both the yellow and the signal aqua line. So now we can basically take a sell trade and wait for the price to fall, to fall below, and then close the trade and take a profit. Right now we are in €2.98. We're in €3. So see, look at it. It closed below it and it went up to test that resistance, the top line, but it couldn't break through it and it had to come back again. So there is another logic. Imagine that we allowed it to reach this block after noticing that it had closed below the line. We allowed the price to retrace, go back up, and then take the sell trade from up here. So we would have been able to accumulate much more pips from here to this place. So I will also subsequently I also teach you how to how the best way to enter the market. I'll teach you the best way to enter the market. Okay. So it went back to test the resistance again, the resistance of the signal cord line. It's just like that. Went back to test it. Hopefully would not be able to close beyond it, and then come back to continue the journey that we set. So how do you take profit? Where do you set your take profits line, or where do you stop the trade? This is determined by a number of factors. Sometimes you have sufficient, for instance, when the market is trending, when the market is in trending environment, the trade can basically last for much longer. When we get into the analysis of other time frames, you will be able to really talk about this much. We'll be able to talk about this one. Let's just focus on this one first. So imagine that we waited for the price to even rise to this point before taking profit. I mean, before entering the trade. Oh, now a new signal has appeared. A new signal has appeared. A new signal has appeared. So a new signal line has appeared, and that is the signal line from a red line and a white line. We have not yet analyzed what the white lines and the red line means as of yet. So that's okay. In the next video, I will be able to explain what the red line. So, well, where to end the trade in case the trade turns around. Maybe the trade turns against you. How, where to end the trade? If you have a trading zone set up like this, you see, the yellow line is supposed to be the maximum boundary. The yellow lines are supposed to be the maximum boundaries of demarcation. So for the signal, you should not allow your trade to go against you as to crossing the other yellow line at the other side. You should not allow that. And if you that's the more reason you are expected to actually trade, sell from the top and buy from below. So in this case now, is the yellow line is pretty close to our signal line, so we can have our stop loss just behind the yellow line. And then this trade, if we knew that another signal line was going to pop up so close to the signal, the yellow line signal that we received, we would not have taken this trade, because now this explained the reason why the price stopped going down at this point, right? So because it was supposed to continue, since it already closed below the yellow line, below the core line and below the yellow line, it was supposed to continue for as far as it can go. But it just got here and stopped. We never knew that there was a yellow line actually existing there, imaginary yellow line, a white line, and other purple and magenta color lines existing right there. So this explains why it had to stop at this point and turn around. So well, it does happen. But what do you do in this situation? What you do is you don't take the trade. If there was a line, another line close to this, you do not take any trade. You rather take it in the other direction. Like now, we would buy here and sell up here, because the white line has higher priority over the yellow line. If a price penetrates the white line, it most likely will not be able to penetrate the yellow line. The white line has the ability to stop the progression of a yellow line, of a price coming out of a yellow line environment. So right now we could even sell from here. We could even sell right now, because we know that this white line is a resistance. This white line resistance is going to stop the progression of this of the movement of price coming out of this yellow line. So just to explain what the white line means, the white line signals are signal lines from a 5-minute time frame, and basically the same thing. They function the same way as the yellow lines that I just explained, just that the yellow lines are the least priority signal lines, being that they are formed from a 1-minute time frame. So they are amenable. They can easily change. Other forces of market forces from the higher time frame can easily influence this yellow line to change their outcome. So this what's the color here? I think this color like magenta. So this is a white line signal, and these two other colors represent the signal core of these white line signals. Like I said, the white line signals are formed from the 5-minute time frame, and so they have a higher priority. They have higher powers. They are able to stop the progression of the signal coming out of the yellow line. And the 5-minute signal white line has its own associated signal core lines, which is this purple color. This purple color represents the actual area where the signal is acting, the core area. So let's go to the 5-minute time frame so that you can see. So this is the white line signal, and this is the signal core, the two signal core line enclosing this candle. So you see this, whenever a signal is emitted, if the candle closes above this signal core line, this purple signal core lines, you are sure that the price is going to continue to go up, like what happened here. It's going to continue to go up until it reaches the other bundle. When it gets there, we can't really tell what will happen, because that will be another subject of price litigation. So they'll have to also bargain with the boundary. If the boundary lets it go, continues. But if it doesn't let it go, like what happened here, the price will return back to attempt to cross this one. Sometimes that bargaining can take happen for a number of minutes, and then you just find the price vacillating up and down and up, and that is what we call the ranging market in forex trading. So it can happen. These are purple lines. Please, they are not part of this white line. They are just coincidental. These purple lines are actually the signal call line from this red line signals. The red line signals belong to the 30 minutes time frame. And as you can see, let's try to zoom. Red line signal belongs to the 30-minute time frame. The 30 minutes time frame is here. This was the white line signal that we saw, and we knew that the red line signals, the red signal lines, were directly attached to the white line. So let's go back to 5 so you can see it properly. So this was the white line, two white line below, and this is the red line. I mean the purple line that we saw, and this is the violet lines that belongs to the 30-minute time frame. So when we go to the 30 minutes, you may not be able to see that violet line attached to this white, but you just know it's there. So if the same thing that happened in the 1 minute time frame also happened in the 5 minute time frame and also happens here, this is a signal line. So, and anytime the price crosses below and closes below this signal line, these signal lines of the 30 minutes, mind, please, you need your eyes to work perfectly. I mean, you just have to have your eyes working perfectly. But when you go over this video and you get used to it, you will understand the dynamics. So you can see that our trade is coming back up. Okay, right now we are in profit, and a new signal appeared. That signal is going to cause a disturbance also, because we already entered the trade before the signal appears, so you know it's going to cause some disturbance. So we could just take the profit here, or it's started going back. We could take profit here and then wait for that new signal to generate a buy or sell command before we go back to the line, or we could allow it and see. Who knows, there could just be a breakout, and then that's a long ride. So this basically is trading breakout. You either trade breakout from 1 minute. If you're trading breakout from 1 minute, this is a breakout from 1 minute. We enter the trade here or here, and then we watch the price go back, go forward, go down, lower, and then take profit when we think that something is trying to, I mean, when we notice any shaking in the market, we just close a position and close our profits. Or we do the same thing for 5 minute chart. The 5 minutes produced a signal here. There was a breakout of the 5 minute signal call lines here, but in the 1 minute chart. Okay, when you see a breakout in the 1 minute chart of a 5 minute signal lines, you are allowed, if the breakout is not so far above, if it doesn't close too far above the signal call lines of the 5 minute of the white signal lines, which is the 5 minutes time frame line, you can buy immediately and wait for the price to rise to the next white line boundary before you close the market or something like that. But you can't do that for 30 minutes. For 30 minutes, you must at least look out for a 5-minute signal chart to close below the 30-minute signal lines. For example, these two are the 30-minute signal call lines, right? So when you come to this, you will see it clearly. This 30-minute signal line boundary lines are the two red lines, and these two white lines, which are actually purple lines, represent the level, the area bounded by the 30-minute signal call lines. Before you can trade the breakout from this 30 minutes, before you can be sure, ascertain that yes, this price has really closed outside of this 30 minutes signal lines, you must make sure that at least the 5-minute candle closed outside of the signal line. So when the 5 minutes, you come to the 5 minutes, if you don't see the 5 minute closing outside, maybe here or here, this beyond the signal call lines, do not take any trade. 1 minute candle, 2 minutes, 3 minutes is not valid. It's not valid. So you have to watch that the 5-minute candle chart at least would have closed beyond the 30-minute signal zone before you take a trade, whether a sell trade from below or a buy trade from above. So for the Divine Basic 2 users, you also have the other signal lines, which are the blue lines and the purple signal lines. They are just in some unique positions today. So the turquoise, sorry, the blue line and the turquoise signal lines. The blue line represents the 1 minute signal line. Sorry, the 1 hour signals. The blue line represents the boundary of the 1 hour signals. And whenever price at maybe a 15-minute chart closes above the 1 hour, the blue line, the 1 hour signal line, man, it means that you are in a trend. So this is the advantage of those using the basic 2. You can trade on a long term. Okay, now we have the 15 minutes already breaks out but has not closed. Let's go to 5 minutes. 5 minutes has not closed as well, but there has been a breakout right now from the 30-minute signal line. You see, but when you get used to, when you look at, we're already in profit. We're about 12 euros right now. So when you get used to using these, you'll be able to manipulate this to your advantage. You can basically take any trade you like to take. So you are not allowed to take a trade right now until that 5-minute line closes below the 30-minute line before you take a trade. Okay, now we are in 5 minutes. Now you can really see the signal call signal lines from the 5 minutes. So these are the violet lines. These are the violet lines that belongs to the 30-minute, that belongs to this red line, red signal lines. So it's as simple as that. For those in the 4 hour, for those using the 4 hour signals, the same thing happens. And when you notice a 1 hour breakout from the 4 hour signal, like as in this case, it's an indication of another trend, whether an uptrend or a downtrend. So that it's so very easy. In this, I have taken this time to explain how to trade breakout. There is also another way to trade within the zone. That's a little more complicated. Trading within the zone. Within the zone. For you could trade within the 30-minute zone. You could trade within the 5-minute zone. You could even trade within the 1-minute zone. But the trading of breakout seems to be much more easier and much more uh, likely. Okay, much more easier and much more predictable. Trading within the zone is also very predictable, but it's a lot of logic that new beginners may not understand just by looking at video or charts. We are looking at providing a pamphlet, having a pamphlet that contains some of this rule and the things to watch out for, to read, where like a handbook, a small handbook on how to, dedicated to how to use this DI Intel, so that you are able to read it and understand what's going on and how to trade it. So the signal, you can see this light green line, the lime green lines. These are the signal lines belonging to the 1 hour, to this blue signal call lines belonging to the blue signal lines. The green, short green lines are signal call lines belonging to the 4 hours turquoise or turquoise signal lines. So that's just how it works. You could trade within the signal zone, just like you can see there's a price movement. See, this price came in and closed under the signal zone, and that means basically, not all things being equal, the price will continue to rise and fall if there are no. It's like the third law of motion happens here. It's forces. Trading is forces. That's why you can just, the price can just go as far up as possible, far down as possible, but sometimes it could just be vacillating within a particular specific spot, because these are real forces acting within the market. So the more you can get hold of these forces, the more you have the patience to analyze it well, the more you will make profit consistently. Okay, and this product, this robot has simplified the whole thing, make it so easy for us to visualize these forces, attempt to visualize these forces. It could be more complicated than this, but this, mostly with this, you are sure you are able to make money. There's no if, right? You're just able to make money. So get to it, start practicing. For instance, this video is already too long, so we're going to stop it here, and we'll make other videos that in subsequent videos I will attempt to trade, to explain how to. Okay, in the next video I'm going to practicalize what we just explained. So, but anyway, we've already started practicalizing it. Remember the trade we took. Now it's in 19, we are in 19 euro or 20 euro. The trade we took, this was a trade we took, isn't it? And now we're already in 19 euro. Okay, so we're good. So see you in the next video. Thank you.